But we primarily work with dairy farms and other agricultural, production agriculture businesses in the state of Wisconsin, actually even beyond as well, Minnesota, Iowa, and some other neighboring states. So with any farms, really, seasoned farms or young farms, the biggest asset, one of the biggest and best things that we see as a common denominator as to who can do well and outperform their peers are the ones that understand their numbers. Having a great handle on your balance sheet, putting together a year-over-year projection and business plan, and again, knowing those numbers. So a beginning farmer, somebody that's looking to get into the industry, having an extremely close and extremely good handle on the finances on the farm and that business plan.
You know, it's always important when I put sessions on like this, is what is the take-home points? What are you going to remember when you leave? If I can leave you with something, those are the 4 points. They know how to take care of cattle and care for them. They watch them. They almost know when they're ill a day before that happens. Secondly, how to grow and buy high-quality feed. But I tell you what, in the end of May, when maybe you shouldn't be putting up that alfalfa, and maybe you should, and you make a decision to do it, and it's quality stuff, that makes a big difference. Understand the financials. Wow. Oh, now we could talk all day long on that topic. I'm talking about balance sheets. Young people, do you understand what a financial statement is and a balance sheet? And a cash flow and projections? Today, if I wasn't here, I'd be sitting on a loan committee at the bank. And you know one thing we'd be looking at? Balance sheets, cash flows, projections. Fourth leg is working with family, working with employees. Young people, the four-legged milk stool.
The biggest factor out there is, as a young farmer, for the most part, is their lack of equity. Somebody that's starting out typically doesn't have a large net worth just because they're young. It's just the situation that the majority of them have. So when we look to try to borrow money, or that farm looks to borrow money, they may not have the assets and the collateral to back that up. However, in circumstances like that, what we find is that the Farm Service Agency, which we work very closely with on a lot of our customers, is that they have beginning farmer programs. And a lot of those programs help extend the availability of the collateral. We can stretch that out a little bit further. And also some of the government interest rates that are out there are very attractive to help cash flow on that farm as well.
Farm Service Agency, USDA, that's a great place. And here's what they can do for you. FSA has $300,000 available for beginning farmers. But that's and you know what? You can borrow one-to-one. If you have $300,000 worth of cattle, you can borrow $300,000. But remember, what do you got to have? Balance sheet, cash flow, projection, plan. In fact, when it comes time to buy real estate, or if you do, there's another $300,000 there. How about other lenders out there? You've got guarantees that lenders can deal with. Again, banks, farm credit, whoever. And the guarantee is good for what? $1.4 million. Now, don't expect to walk into a bank tomorrow and say, Gary told me I can get $1.4 million, so write me a check.